Hey traders, checking in on the stock market today. More back and forth jerk around with the stimulus headlines, reminding us of back in the day when the China trade deal headlines were doing the same thing. We have Netflix earnings reaction and the bears coming out on top of the S&P 500 into the close, but there is one key level that the bulls continued to defend. We'll take a look at it in just a moment.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
All right, so let's zoom in and look at the headline reactions. So here's let's go through the whole day. Started the morning for the bulls, 5-minute trend change, high of pre-market 345. That was a resistance level we were watching. No convincing break over that level, just some upper wicks, and then we pulled back and dumped to the low of the day. Low of the day held the low of pre-market by a penny. At that point in time, we're pretty much smack dab, there's a bear move, smack dab in the middle of the pre-market's range and waiting for things to sort itself out. We then climbed our way back up towards the high. Here's a bullish reaction to a headline, some follow through, some consolidation, a bearish reaction, and what stands out is, coincident or not, high of the bull move reaction 5-minute candle is exactly where the bear reaction headline comes out. We dump to the low of the day, we hold it again. It's now a triple bottom. We dump at the end of the day again on the Netflix bearish earning reactions. It's a quadruple bottom, and here just now we have broken through it. Essentially what we are seeing is every time we have a bullish headline, we fade up, that's when it's time to scout a bearish entry, because we know the only headlines that are going to likely come from there in the short term are bearish headlines that have the market reprice in what it just priced in. So now we're getting the bearish headlines, just like yesterday afternoon. So we're going to keep talking. The 48 hours may not matter anymore. We hope to have a deal by the end of the week. It is just continuously kicking the can down the road. And if you do not want to trade during this back and forth headline joke, then don't. There's nothing wrong with that whatsoever. There are still plays to be had. For example, the size of the pullback from the SPY high of the day. We knew to be watching for the potential of a 5-minute lower high, and a bear could make an entry there. And then, of course, the headline helps that position. So at this point, the bears still have their full short-term control, and a daily inside bar is on the verge of breaking bearish. We'll see what tomorrow or what tonight does overnight. And we're looking at 340.264 and 341.04. And looking in at the S&P 500 futures chart, we're right down approaching that low. So bears are in control of the short term. The market is absolutely reacting to the headlines. If we get a stimulus deal before the election, we will see a bullish reaction. Will we march to all-time highs? Probably not. I would be surprised if we did. All it would do, in my opinion, is put a stop to the weakness in the short term. If we don't get a stimulus before the election, we'll fade down and we'll price that in. And I would be looking for a weekly high or low compared to 3,210. What's that level on SPY? 320, make that 319.80. So we have Netflix earnings reaction is bearish. We were down 5-6%. But we also had Snap bullish reaction to earnings. So let's go through that real quick. So we got, here's Netflix, 5-minute bearish reaction, down 5-6%. We got Snap with a big bullish reaction to earnings. Why does that matter? Well, look at Facebook and look at Twitter. So there are tech names that are going up because of Snap, which is offsetting the weakness that we're seeing because of Netflix. So here's QQQ holding the low of the day at the moment, while SPY just broke the low of the day. Short-term bear control. And on SPY, we'll just be looking at anything under 340.688 as an hourly lower high next time we bounce. IWM, daily inside bar, and we have not broken the low of Thursday. That's very notable. Any name that has not broken the low of Thursday stands out because that is, for the most part, fending off weekly consolidation. So we are trading sideways on the weekly. We are not pulling back. because that low of Thursday is currently holding. So we'll be watching 158.81 as the most important short-term support on IWM for the rest of the week. QQQ, low of yesterday, double bottom, it held. It's still in play though, here after hours. As we're approaching that level yet again, if that level breaks, again, weekly consolidation continues, looking for a weekly higher low compared to 260.11. And at this point, I'm now just watching next week with Amazon, Apple, and all the big boys having their earnings, which is going to impact the tech sector in the short term. Healthcare, daily inside bar. Key level in the short term is the low of yesterday, 105.85. Bulls would have to break the inside bar bullish, but we closed at the low of the day. XLF, holding the low of Thursday, which is helping IWM hold the low of Thursday. And that level is 24.51. Double top at the high of yesterday, failed to break that resistance. Inside bar today. Biotech sector, daily downtrend confirmed. Zoom out, weekly consolidation underway, and we're looking for a weekly higher low compared to 105.89. So out of those major sectors, IWM, XLF holding support from Thursday, and everybody else is watching the low of this week as a key short-term support level. And one more check into the S&P 500 futures, because we could, if pretty much the bulls show up now, all through overnight like we saw last night, I would be watching. We'll see where this 4-hour candle closes, 14 minutes. So we had been holding all today, but it does look like we are close to breaking that trend line bearish. So forget that. Not interested in that anymore, just interested in the low of yesterday. SMH, also holding the low of Thursday. It looks a lot like IWM. Daily inside bar, key support 184.40. If that level breaks, we zoom out because weekly consolidation is underway. If that level holds, the bulls keep short-term control. TAN, bull flag confirmed. Solar sector, increasing bull volume. Beautiful follow-through. Well, less than $1 of follow-through. Bulls want a bit more, but a good start. Hourly bull flag into the end of the day. Obviously completely disregarding the broader market weakness. And right now, this is essentially a hedge sector. That won't be the case forever, but going up while the market's going down. The VIX, all about 30 in the short term. If 30 breaks, it means likely another clear leg down is taking place in the S&P 500, and the bears will keep their short-term control in the broader market if we're going to see these resistance levels break. 30, 30.50, and 31.20. Key levels all in play. The dollar is weak. This is a good sign. The bulls were unable to set the daily higher low compared to 93. And right now it's a double bottom, but the fact that we made it all the way back down to that support level decreases the odds of the daily trend change, which again is a good sign for the Bitcoin bulls, which are breaking out, the metals, which saw some bullish action today, and of course the broader market. But in the short term, the broader market is more subject to reactions in the stimulus headlines. I can't wait till I don't hear the word stimulus for a very long time. I can't wait till I don't have to pay attention to government tweets. It's going to be so great. I can't wait. So the dollar, if we break 93, no weekly higher low is set. 92.75 is the next support level from there. Anything under 93.90 is just a daily lower high, keeping the daily downtrend intact. So gold, daily uptrend is still intact, which is all I care about. Daily higher lows. If the bulls are holding 1882, they're keeping short-term control, and a weekly lower high has not been set yet. Silver's the same thing as long as we're holding 23.57. So over the next week or two, or however long these daily higher lows hold, I'm just moving up my benchmark level, and if it's holding, then I'm just patiently watching still. Miners, that's who I'm missing. So miners broke the low of yesterday, but no real bear follow through. We lost the daily uptrend while the metals have not. So that is leading to a weekly lower high already being set. And we'll see how that disconnect shifts. Are the metals going to drop down and join the miners? Are the miners going to recover and join the metals? We'll see over the next couple of days. Oil bull break of 2 resistance levels. Have to break 42.02 for the trifecta. Just looking for an hourly higher low right now. Inventory report tomorrow would need a bullish reaction. All about 42.02. It would definitely be a red flag if we break 40.46 from here, as it would be a bull break of 2 of the 3 levels and then a complete turnaround. So bulls want to maintain the hourly uptrend, the 4-hour uptrend, and ideally get over 42 on a bullish reaction to the inventory report. If that takes place, the odds of our monthly higher low being set will increase a bit. Natural gas bulls getting follow through. 4-hour uptrend remains intact. Very healthy. Lack of resistance. We're looking up to 278 as the next resistance level. 4-hour uptrend is our midterm guide. When it's lost, we'll look for a daily higher low. And there's the Bitcoin bulls. Daily bull flag breaking out. Increasing bull volume. Bitcoin is my largest position right now. Aside from, well, no, it's larger than USMJ. So I'm swinging Bitcoin, USMJ. That's pretty much it as far as sizable, notable positions. Other than that, waiting for things to sort themselves out with the stimulus headlines into the election and sticking to day trading otherwise. And walking a Bitcoin stop up on every higher low that we set. Let's check back in on SPY one more time. Bouncing from that new low. So essentially, all I'm watching in the short term is SPY 341.04 support is more important to me than the low of today. And as far as resistance, 346.88. So a little $5 range that we are currently still within. Burden of proof is on the bulls. Bulls didn't prove much to us today, aside from a nice headline reaction. They weren't proving anything to us before that headline. So I'm going to remain skeptical of the bulls in the short term until they can prove a solid bull volume hourly trend change during regular trading hours. And that's what I'll be watching for. Have a good rest of your day. Do good things. Cautious of the headlines and the bots. Use a stop loss on every trade. And anticipate that headline volatility until we get some kind of conclusion, at least in the short term. What's going to happen is we're going to stop hearing about the stimulus. The market will price in that it's not going to happen if that's the way it plays out. And then we get to look forward to November stimulus headlines all over again. Can't wait. See you then. So for 20 years, the previous owner would just mow the leaves into the grass. So the soil here is very loamy. And just walking around barefoot, you can feel all the moles and voles that have dug a network of tunnels all through the yard. So I'm starting to collect some of the leaves. Don't want to deplete the lawn of carbon, but that's a good source to use, whether it's mulching in around things and stamping out weeds or covering soil to allow moisture content to stay in it so things don't dry out too much in the spring. So playing around with leaving leaves in a bunch of areas in the yard, but taking some along paths and such. Things getting big enough to start picking consistently.